So let me say that fight part out loud. If your expenses are a mess, your profit number is basically a rumor. And that's why you feel trapped. Owner purchases mixed up with random stuff coded in random places. We've seen that a lot. A mountain called uncategorized expenses. Then someone says, hey, let's build a KPI dashboard. A KPI dashboard on a messy expenses, it's like trying to find out how much you spend this month, but half of your receipts are missing and the other half are stuffed into random pockets. You can't make any sense out of it. You probably can add it up, but you would be wrong. So today, let's fix that picture. Here's a real life example. A tech company that recently came in, a software company with about $3 to $5 million in revenue range, not early stage startups. They have real team and real budget. And they had the founder was on payroll, an ops admin, a bunch of 1099 contractors, and a handful of full-time employees. And then a stack of tools. So cloud hosting, subscriptions, advertising platforms, payroll, bunch of other SaaS apps. On paper, they looked profitable, but every month looks like a surprise. Some months they crushing it. The other month is like, why are we tight on cash? Why are we struggling to run the payroll? And the founder keep asking the same question. Can we trust this P&L report? Can we trust the cash flow and the balance sheet? So we opened the books and we saw the usual suspects. Hundreds of transactions sitting in an uncategorized expense bucket. 2 credit cards used for everything. Business, personal, team meals, flights, vendors duplicated 3 times in 3 different ways. We also found like a cloud software spend coded incorrectly and inconsistently. Sometimes it's coded as a software. Sometimes it's cost of goods sold and they can't find out. It goes to miscellaneous. So add to that reimbursement with no notes or receipts, just vibes. So their profit bounced around not because the business was unstable, but because the bookkeeping was a mess. And in tech, messy spend hurts extra because so much of it is recurring. So let's break that picture and this scenario in 3 pain points. The first pain is when business and personal expenses are mixed up. This is a big audit trap. This is like dumping all your laundry, work clothes, gym clothes, and towels into one pile and then trying to count how many work outfits you own. Well, you can guess, but you'll be wrong. Same thing happened with expenses. The moment personal and business expenses are all mixed up, or spending this on a business card and sometimes on a personal card, everything gets fuzzy. Your reports becomes unreliable. Tax planning gets risky. Cash planning turns into guessing, and your bookkeeper, you have to start assuming because they don't know how to categorize the expenses. The simple fix is very simple, separating money lanes. So one business checking account, one business credit card. And if you have a team, you give them separate team cards with limits. And if you're using personal cards, your spouse card with random Apple Pay account, that's when things get fuzzy and messy and bookkeeping becomes a mess. Well, mistakes will happen, of course, sometimes, but putting those money lanes separate and clean, that will help minimize all these mistakes. Okay, let's talk about pain number 2. Owner draws versus business expenses are mixed up. Now, this is where founders get trapped and get mixed up and confused about, well, what's that money? How can I categorize that money that I take out? Well, let me clarify for you. Owner's draw are not supplies. They're not marketing. They're not meals. Owner draws are basically when you tap into the money or the profit in the company, take money out for personal use, period. And if owner spending is mixed up with normal expense categories, then your profit number becomes fake. Either it's too high or too low. So here's a quick example. Let's say your P&L has a $400,000 revenue and your expenses are $340K this quarter. Well, then you have a profit of $60,000. But inside that $340,000, you've got $15,000 as personal stuff. That got coded into that business category. So now your real profit is not 60,000, it's 75,000. That changes everything. How much you pay for taxes, to save for taxes, whether you can hire, whether you can increase marketing spending, how much cash actually you have in the bank. On the reverse side, if you sometimes real business spending get coded as draws. So profit also looks bigger than the reality. And then you are planning based on a number that's not real. The fix is boring, but it's powerful. Personal spending goes into one place on a draw. Business spending goes into the right business category. Simple. Let's talk about pain number 3. Big uncategorized bucket. So uncategorized expenses or uncategorized assets is your accounting system is all mixed up and saying that I didn't know where to and how to classify these transactions. So I just put it as uncategorized right now. And the longer you wait, the worse it gets because you forget. For example, a credit card that could be software coded to contractors, that could be marketing. If you have like one category for each vendor, makes things very easy. So you've got software companies, that's always subscription. Reimbursement that were not labeled correctly and got dumped into miscellaneous. Random subscription that no one knows who used those software or tools. So uncategorized expenses, it can really make things too messy, too quick. And it kills your speed because now at the month end close and have your reports and you still have this big bucket that you can't explain. Here's the system that actually works for busy tech founders. Take 12 minutes every week, just 12 minutes to clean up the uncategorized bucket. Not on Saturday marathon, not on the date of the month panic. 12 minutes every week, same day, every week. And in those 12 minutes, you do 3 things. You clear the uncategorized transactions and add a quick note to anything weird like personal client reimbursement, one-time setup or supplies that you don't know where it goes. And also you upload all the receipts for those expenses. So your bookkeeper or your accountant know how to classify it. That's it. And because when you do that on a weekly basis, your brain still remembers what those charges are. But if you wait like 60 days, 90 days, everything becomes fuzzy and messy. Next, you set rules for your top vendors so you stop making the same mistakes forever. Most businesses have a repeat expense, a recurring charges. Cloud softwares, cloud hosting, payroll provider, marketing platform, your CRM, phone, internet, all these are repeat. Those vendors should not be manually categorized. You have to create rules. Your accountant should create rules for those expenses. Vendor X always goes to category Y. So by doing this, that creates consistent reports. Now, let's talk about the sneaky profit leak subscription creep. Your team signs up for a lot of tools. Let's try this. Let's try that. There's like a new AI app. No one cancel anything. So once a month, do a simple subscription sweep. Put your recurring charges on one pocket, download those transactions in Excel file, and start going one by one. Ask yourself a question. Ask your team. Do we still use this? Well, does it save time for us or does it make money for us? If we cancel this, is that going to break anything? And if nobody can explain what these tools look like or how they work, then go ahead and cancel them. That one habit could save you hundreds, maybe thousands every year. Now, how do you know you are winning? Well, here is the KPI that I want you to track. Simple and easy. Let's talk about KPI number 1, uncategorized expenses. You need to target 20 or less transaction in every month or at any time in that bucket. KPI number 2, days to close the month. Your target should be having good all your final reports, P&L, balance sheet, cash flow in less than 15 days. So if you're at 20 or 30 days close right now, you're not alone, but that is fixable and you need to work on that. KPI number 3, personal transaction on business account. Your target should have 0 personal expenses. That's a big audit trap and that makes everything messy. KPI number 4, duplicate vendors. Well, your target should be 0 duplication at any time because duplicates messes up the reporting and make vendor tracking painful. KPI number 5, consistent coding for your big vendors. So your target should be the same vendor hits the same category every month. And here is the bottom line. If your expenses are messy, you don't have a dashboard problem. You have a system problem. Fix the system first, then build a KPI, then make everything, and you can make a decision based on real clean data. So if you want help with this is exactly what CAS services and fractional CFO services that we offer. We come in, we clean up the books, create rules for your top vendors, and set the weekly cleanup rhythm, tighten your month close so you can get numbers you actually trust every month without living into your accounting software. If you want the next step, just review all your books and look at your expenses and see if that can add value to you. I just want to thank you so much for watching this video and hope to see you on the next one.
This has been another episode of our tax-saving video series. If you enjoyed this video, please like it, subscribe below, and share with other business owners. You can find previous episodes and more information at www.bostacpa.com. Thanks for listening, and have a great day.